Most traders lose the money because they enter the too early or they are too late. So don't worry if you are seeing a white screen. I have just put in the whiteboard. But today I'm going to show you one of the most cleanest continuation breakout patterns, which is an ascending triangle. And usually over the weekends we'll be adopting this whiteboard method for explanation so that we can understand the theory, and then we would try to match it up with the real situation in Nifty or whatever stock we are trying to analyze, so that on one side we would be educating ourselves, and plus if you get any patterns in the future, you would be able to use it at your own discretion, so that now we would have a knowledge about what an ascending triangle is after this session. And then probably you can use this. You don't have to wait for a strategy or told to be by anyone for you to enter the trade and exit the trade, or put a stop loss or the target. So welcome back. This is Mohiith Shankar, and welcome back to the channel of Trade Smart with Mohiith. So today in the classroom sessions, we'll be understanding what is an ascending triangle. The ascending triangle is a bullish continuation pattern. It's a bullish continuation pattern. So if I mean to say, if I say it's bullish, it means to say that the price we are expecting it to go up in the coming days or in the coming weeks. So we'll take the example of Nifty and we'll try to understand what an ascending triangle is. We'll try to understand what an ascending triangle is. Why does it form? And the third, what should be our entry? How the smart traders enter? Where to put our stop loss? I always tell you one thing: we would enter a trade only, if we know the entry point. If we don't know the entry, and if we not sure about the target, we don't enter any of the trade. And when to book the profits. And most importantly, how to avoid fake breakouts. Fake breakout. So today in this session of the ascending triangle, we would understand all these topics point by point. So let's begin with what is an ascending triangle. What is an ascending triangle? It is the pattern which we will be trying to identify and learn. So an ascending triangle, it looks like this. This is how it looks, and the price moves in like this. So this is an ascending triangle. What you can make out of the top is that the top is flat. It's almost the same price point. In our case, an example, if we are to speak about Nifty, 23,780 till 23,830 has been a supply zone. So this is a zone of supply, and then this is a zone of demand. Now how am I gonna get this? These are the two trend lines. When we draw, connecting the highs of two or more peaks, we are getting a flat line, and this is our bottom trend line. This is a trend line 1 and this is trend line 2. Okay, when we draw the bottoms, when we draw a trend line connecting two or more bottoms, connecting the lows, we would get a an ascending trend line, and this one is a flat. So when it seems as if they are going to meet at some point. The shape looks like this. That's the reason why it's called as an ascending triangle. It means the buyers are becoming stronger day by day, while the sellers are defending one important resistance zone. The sellers are trying to defend this 23,780, 830, but the buyers are becoming more and more stronger. Now why do I say that the buyers are becoming stronger? What is psychologically what is happening in this is, every time the market falls, the buyers are entering early and the buyers are unable to push the prices lower. This means that demand is increasing. Eventually the pressure builds, and once resistance breaks, we would get a strong unidirectional movement, probably till 24,260. Now how am I telling 24,260? We'll try to calculate that as well. So relating to the Nifty, now let's understand with the recent Nifty movement. Nifty had a resistance zone. Now let us go back to the chart so that it becomes interesting. This is a 5-minute candlestick pattern. Now let me change into a 30-minute candlestick, because I understand one thing when I'm talking about candlestick patterns. 5-minute is good when you compare. It has got is more reliable than the 1-minute candlestick. And a 15 minute is has a more reliability than a 5 minute, and 30 minutes has a better reliability than a 15 minute. It's always like that. Higher time frames, a better reliability, the chances of a false breakout is less. Now when I am talking to you about 30 minute, this is a 30-minute candlestick. We are trying to analyze it. See, understand this, we might be wrong or we might be right. In trading it's always like this. So if we are wrong, then the stop loss would protect us. What I have done here, I have drawn one trend line, a flat line connecting the two or more resistance points. Now here, this is, if you can see here, 840, 834, and then again this one again would come into the resistance zone itself, because if you can see the high here, it is 780, and again 21st of May, this is a multi day levels. What we are talking, this I have drawn from the this is from 15th of May, 14th of May, as you can see, 14th of May till probably 1 week's chart or 10 days chart. So every time the market is trying to break this resistance zone, it falls. Initially the fall was up to 23,250. Okay, now what has happened, let us understand this point. 23,260 was an intermediate low which we had formed on a multi-day wise candle. When I'm trying to draw the support level, let me put it in green. Now what has happened here, if you can see, now what we are supposed to be doing, we are supposed to draw a lower trend line. Let us try to draw the lower trend line. I'm connecting the bottom or the lows of the successive lows. So one is this one, 23,315. I can connect this one as this low as well, but let me connect this one, 23,301. This is 23,423. Either you can connect the lows or you can connect the closing price of that low. That is also okay. Let me connect the closing price. It becomes a better it gives me a better visual. Visually it becomes a better figure. See this, I am connecting the closing figures of these low candles. All right, okay. See this, what I'm trying to make out is, see this, if I'm just extrapolating this to a future date, now this is taking up a form of an ascending triangle, as we have explained in the whiteboard. Now at certain point in time, the buyers are going to overwhelm the sellers. If you see the lows which has been happening, it has been making higher lows, 23,350, and there was an upturn till 23,780. Then there was a fall till 23,459. The low was 395. Again there's an upturn. So what has happened? The low of here is 23,317, and here the low was 23,395, almost 80 points. Again it tried to breach 23,820. Again here what has happened is the low is 23,592. all right, and again it has tried to hit. Probably we are gonna see this, and the possibility is that it might resolve on the higher end. So the resistance remaining the same, but lows have started rising, as you can see here. So this is a very simple clue, because it tells us the institutions are accumulating positions here. Weak hands keep selling near resistance. Okay, so weak hands keep selling towards the resistance, but the smart money keep buying the dips. Now we have seen how we have drawn the pattern. Now let us understand what is the entry strategy. Let us go back to our whiteboard again here. Okay, so what is the entry strategy? There are two methods of entering this. This is an aggressive entry, and understand this is you can use this for intraday as well as for a multi-day trading. Need not be only a single day trading. Aggressive entry, this is the first method, and the other is the safest retest entry. We'll try to understand. Enter immediately when price breaks above resistance. Probably since 23,830 till 23,780 has been the resistance zone or the zone of demand. Once it breaks 830, you may enter, but it has to break with strong momentum. Strong momentum, that means to say, and volume. Aggressive traders enter instantly, but this method has slightly higher risk of fake breakout. We have seen many cases wherein the market had opened at around 860, could not sustain for 5 minutes, and then drastically came down all the way till the lows of this trend line, as an ascending triangle, as I showed it to you. So this is one aggressive entry. It breaks above 830, 860, 850 or 860, and then it tries to go up, makes fresher highs, and probably then you can buy, keeping a tight stop loss. What is the safest retest entry? The safest entry is safest retest method, which I would definitely use it, which I believe in. So wait for the breakout to happen, and then wait for the market to retest the breakout zone. So wait for the breakout to happen and wait for the market to retest. So let me reduce this. Okay, wait for the breakout to happen and wait for the market to retest this. Okay, retest 23,830 or 780 levels. If the buyers defend that level again and that it is a confirmation, when the safe entries come, probably here you can enter. It means to say that it has to dip here 830 780 levels. Ideally I would try to see if it comes back from 850 860 again 830, then again tries to sustain above it. If it sustains probably for at least 3 candles, probably in a 5-minute candle 3 candles, or a 15-minute candle 1 candle, then I will enter here. What would be our stop loss? A stop loss placement. Now where should we keep the stop loss? This is where many trades fail, because never keep random stop losses and don't assume that this is an ascending, this triangle is gonna stay, our analysis will hold good. No, we were just estimating what can happen in the future, but we are trying to predict the price movement in the future, but we can go wrong as well. So stop loss usually goes below the recent higher low. Now what is the recent higher low? We will try to understand. When whatever, say suppose this is L1, this is low 2, this is low 3. Okay, so our stop loss will be below low 3, L3. This is our stop loss, below L3, because if the markets fall below that, breakout structurally becomes weak. And how do we calculate the targets? Now the next thing is the target. Now how do we set up the target in case of an ascending triangle? So we have to measure the height of the triangle. Now how do we measure the height of the triangle? On one end we said it is 23,830, and the other end we said 23,400. 260 was also there, but let us consider it as 23,400. What is the distance between this ascending triangle, this high and this low? If you calculate, this would be around somewhere around 430, 400 to 430, approximately 400 to 430. Okay, so now add that to the breakout level. That is, our breakout level is 23,830. You add that. I would say at least keep 430, 400 points. Don't add 430. We'll round it off. Now we get a target of 24,230 or 260 levels, 230 to 260 levels. Now the market may or may not reach the exact target, but it gives a directional estimate. It gives a directional estimate. Okay, this would be our target. What are the things to do? I usually say always put risk reward. If 1 is your risk, take at least 1:4, because obviously we are taking, or 1:2 should be the minimum risk reward which you are keeping for any trade. Second, you do partial booking. Say for example, you have traded 10 quantities of Nifty. Probably once it reaches a certain point, you can book 5 quantity and let the other 5 quantity to, you can hold the other 5 quantity by putting a trailing stop loss. What do you mean by trailing stop loss? Probably it has hit 23,900. Okay, put a stop loss at around 23,860. Now it becomes your break even, slightly above your entry point, and then once it reaches 24,000, put a stop loss like 23,950, somewhere like this. So it need not be exact these numbers, it can be whatever number you feel is right for your trade. Don't become greedy. Okay, one final warning: not every breakout is genuine. Not every breakout is genuine. Okay, if breakout happens with weak volume, there might be an immediate rejection and market closes below resistance. That can become a trap for you. So always try to exit. Don't wait for it to probably reach the fresher lows. If you're intraday, if you're an intraday trader, then you should not hold it till for probably you can't continue for the next day. It's better to exit the trade for that particular day. So price action first, emotion later. That's how professional traders survive. So if you have enjoyed this practical breakdown of the ascending triangle, so if you have enjoyed this practical breakdown of the ascending triangle pattern using real Nifty movement, subscribe to the channel. I will regularly post live market analysis price action concepts, options trading education, and real trading psychology in our coming videos. See you in the next video. You have a wonderful day.